Imagine waking up tomorrow to find that the $100 bill in your wallet is worth less than the paper it's printed on. Sounds like a nightmare, right? But for empires throughout history, this nightmare has been all too real. The Romans watched their denarius crumble. The British saw their pound sterling lose its crown. And now, whispers are growing louder. Is the American dollar next? Right now, at this very moment, countries around the world are making deals without the dollar. China and Russia are trading in their own currencies. Saudi Arabia is entertaining the idea of selling oil in Yuan. The BRICS nations are building their own financial system. The foundation that has held the dollar as king for nearly 80 years is showing cracks. But here's the trillion-dollar question. Is this collapse actually good? Could the fall of dollar dominance be the reset the world needs? Or are we staring into an economic abyss that will make 2008 look like a minor inconvenience? Let me take you on a journey through the rise and potential fall of the most powerful currency in human history. In 1944, while World War II still raged, representatives from 44 nations gathered in Bretton Woods, New Hampshire. They had one mission: rebuild the global economy from the ashes of war. What emerged from that meeting would change everything. The US dollar became the world's reserve currency, backed by gold and America's unmatched economic might. This wasn't just about money, it was about power. Any country that wanted to buy oil had to use dollars. Any nation building foreign reserves needed dollars. Any major international transaction flowed through dollars. America had just been handed the ultimate economic weapon. Think about what this meant. The United States could print money, and the entire world would absorb the inflation. They could impose sanctions, and countries would be cut off from the global financial system. They could run massive deficits, and other nations would still line up to buy treasury bonds. It was the greatest privilege any nation has ever held. For decades, this system worked beautifully for America. But, like all empires, it planted the seeds of its own destruction. Fast forward to today. The United States national debt has exploded past $34 trillion. That's trillion with a T. To put this in perspective, if you spent $1 million every single day, it would take you over 90,000 years to spend that much money. The debt grows by roughly $2 trillion every year. The printing presses are running hot. But here's where it gets interesting. For the first time in modern history, the world is actively building alternatives. China has launched the digital Yuan and is pushing hard for it to be used in international trade. Russia and China conduct massive trade deals in rubles and yuan. India is buying Russian oil in rupees. Saudi Arabia, America's oldest Middle Eastern ally, is now accepting yuan for oil sales to China. The BRICS nations, Brazil, Russia, India, China, and South Africa, along with new members like Iran, Egypt, and the UAE, are constructing a parallel financial system. They're creating their own payment systems to bypass SWIFT, the Western-controlled banking network. They're talking about a BRICS currency backed by gold and commodities. Even Europe is hedging its bets. The euro was supposed to be a dollar challenger, and while it hasn't dethroned the dollar, it has captured about 20% of global reserves. So what happens if the dollar loses its throne? Let's paint the picture, and trust me, it's not pretty for most Americans. First, imagine your purchasing power cut in half, maybe more. Right now, the dollar's global dominance keeps it artificially strong. When that support vanishes, the currency collapses like a house of cards. That iPhone that costs $1,000, try $3,000. That vacation to Europe, forget about it unless you're wealthy. Imported goods, which America relies on heavily, become luxuries. Second, interest rates would skyrocket. The US government currently borrows money at relatively low rates because the world needs dollars. Remove that need, and suddenly America has to compete for lenders like everyone else. Mortgages that were 6% could hit 15 or 20%. Credit cards could charge 40% interest. The housing market would crash harder than 2008. Third, the government would face an impossible choice: slash spending dramatically or inflate the currency even more. Social Security, Medicare, defense, all of it would be on the chopping block. We're talking about austerity measures that would make Greece's economic crisis look mild. But here's where the story takes a turn. What if this collapse is exactly what the world needs? Let's consider the other side of this coin. The dollar's dominance has allowed the United States to live far beyond its means for decades. Americans consume way more than they produce, importing cheap goods while exporting printed paper. This has hollowed out the manufacturing base, destroyed communities, and created massive wealth inequality. The Rust Belt didn't rust by accident. It rusted because the dollar's strength made it cheaper to make things overseas. For the rest of the world, dollar dominance has been a straightforward form of exploitation. Developing countries have to earn dollars to buy oil and pay debts, meaning they work for America's benefit. When the Federal Reserve raises interest rates to fight American inflation, it triggers debt crises in emerging markets. When America prints money, poor countries absorb the inflation. The system is rigged. Have you ever wondered what would happen if the US dollar, the king of global currencies, suddenly lost its crown? It's a question that's been popping up more and more. For decades, the dollar has been the world's go-to currency. Countries hold it in their reserves, oil is priced in it, and international trade often happens in dollars. This is what's known as the petrodollar system, and it's given the United States a massive economic advantage. But things are starting to shift. Countries like China and Russia are actively trying to move away from the dollar, trading in their own currencies instead. We're also seeing the rise of economic blocs like BRICS, which includes Brazil, Russia, India, China, and South Africa, who are exploring alternatives to the dollar for international trade. Even some oil-producing nations are considering selling their oil in other currencies. This process is called de-dollarization. So, what would happen if the dollar actually falls? Well, for the average American, it could get pretty bumpy. First off, imports would become much more expensive. That phone, those clothes, even some of the food you buy, the prices could shoot up. This would lead to higher inflation, meaning your savings wouldn't be worth as much as they used to be. Internationally, it could cause a lot of chaos. A weaker dollar might make U.S. exports cheaper and more competitive, which sounds good, but it would also create huge instability in the global financial system that's built around the dollar. Interest rates in the U.S. would likely have to rise significantly to attract foreign investment, making mortgages and loans more expensive for everyone. But let's be clear, this isn't something that would happen overnight. The dollar's dominance is deeply rooted in the global economy. There's no clear alternative that's ready to take its place just yet. The euro has its own challenges, and the Chinese yuan isn't fully convertible. Still, the trend is undeniable. The world is slowly but surely moving towards a multi-currency system. The reign of the almighty dollar might not be over, but its absolute power is definitely being challenged. What do you think the future holds for the dollar? Let me know your thoughts in the comments below. Thanks for watching, and don't forget to subscribe for more insights into the global economy.